Hey everyone, welcome back. So this is Trend Investor and Algo Trade again. So this is my second video, and today I have five stocks to discuss, which could probably be for a medium-term investment or sometimes even a long-term, depending on the price action. Or some of you could also use this as a short-term trading idea as well. So let's get started. Right. So obviously all these stocks which I'm discussing is for educational and information purposes, and I'm not a SEBI registered advisor. So I hope that is clear. Jumping on to these slides directly. So we talk about Cipla and Auropharma from the pharma space. These two are predominantly large caps. And then we would speak also about Firstsource Solutions, which is a mid cap stock. And then two small cap ideas, which most of you would be interested, which is Paisalo and Khaitan. Now, all these have been selected primarily based on the technical and the price action and with some good fundamental support as well. So they are not very bad companies as such. So they are fundamentally doing well. But the primary reason for my selection is the price action or the price movements, right? So let's move on. So I would also show you the charts on TradingView. So the first chart that we're going to look at is Cipla. So Cipla, as all of you know, is in the pharma space and it's one of the large caps. It has around 60,000 crores market cap. That's around $10 billion. And if you see, this is the entire history, and I'm on the monthly time frame, and this is the entire history of Cipla, right? And since Cipla, if you see since IPO, the price, the we had a nice correction since IPO all the way from 380 to 50 odd levels, and then there was this nice up move, and we had some sell off here, a small sell off, and then there was this first breakout which happened in 2012, right? And this was a 12-year breakout, right? So from 1999 to 2012, right? So that's almost a 12 years high here. That's the first time when the stock broke out, and then it went on sideways for 1.5 years. And since then, there was another breakout, and then it went from 440 to 900, 700 odd levels. And then again, there was a consolidation phase when the entire pharma sector corrected for almost 5 years, 2015 until 2020. And the price took support exactly at those IPO levels, right? Now, this is the importance of demand and supply in markets. Now, here, if you see, we have this nice demand again popping up here around the same zone where we had a breakout, right? So basically, this selling which happened here, right, was all absorbed in this breakout over here, and then it went all the way up. And again, when it came to the same level, we saw some nice buying during the COVID crash. And since then, the stock has moved up nicely. And then we had this 4 months move consolidation here, right? So stock did not do anything for 4 months. It was just within a range uh, from 700 to 800 odd levels for almost 4 months. And now this week and this month, we are seeing some nice movement here, and you see that nice pop up, right? So the price is moving up, and I see that this is as a 5-year breakout. So this is new highs since 2015, a fresh highs, right? So this is a strong move, and I feel that Cipla can, give good returns from here. No one knows how much, but we will try to keep a stop somewhere around the lows of 706, and we will be invested in the stock for how many over months or years, depending on the price action. I will try to provide updates on these stocks as and when possible, but let's quickly jump on to the fundamentals of this company, right? So the price right now is around 833. It has a market cap of around 67,000 crores. It has a relatively expensive P, but I think it should correct in the future and this should go down. ROC of 11.8%, 9% of ROE. It's average. It's not very great, but it's okay. For a large cap, I think these are pretty decent numbers. And the book value is around 200, so which means the price is trading around 4 times the book, right? And it has a debt equity ratio of 0.19, which means they're pretty well equipped in terms of liquid assets, and they also have liquid assets to pay off their interest. And the promoter holding is around 36%. Now, looking at the fundamentals, so this is the P&L of Cipla, the profit and loss statement. Now, if you see the sales has been kind of almost growing always since 2009. They've always been growing the sales. In fact, I hardly see any dip in the sales in any of the years. So it's a pretty solid company, and they've almost gone sales has increased by 4 times since 2009, and right now we're at 18,000 crores. And even the profits is at all-time high. right? So we have been seeing good profit numbers. Looking at the sales growth, they've been growing at a 3-year CAGR of 6% and a 15% CAGR in the profit growth. Now, these are pretty good numbers for a large company, a blue chip company, and that's why I consider this as a very safe investment. And and it's right now just starting to pick up momentum. And the interesting number that you see here is the operating profit margin. Now, here, if you see, the numbers have been around 18%, and we've come back to 20%. Right, so that's the 2010 levels. Now, this is going to reflect for sure in their profits. So a higher operating profit margin would mean that their sales, that the profit numbers would go up significantly. So any 1% increase in the profit margin would mean around 180 crores in profit, right? And that's why you see this when the sales has grown just by 6%, their profit has grown by 15%. Now that's purely reflecting from the increase in profit margins, operating profit margins, right? So, and the interest has been kind of almost same. So they're not borrowing much or they're not reducing the cost. But I think that's pretty safe. 180 crores for a 1800,000 crores company is a pretty decent number. Now, coming to the balance sheet, the one point I want to focus on is in the borrowings. So the borrowings have come down from 5,000 crores to 3,000 crores. Now that's a pretty significant reduction. So it's around 30 to 40% reduction in the borrowings, right? So I think that's pretty healthy for the company, and the interest cost should reduce, their profits should go up, sales should grow up, and I think with pharma already leading the way in the last few quarters, I think pharma should be the space one should be invested in, and this company is a decent company to be in, right? So one can buy at current market price with a stop loss of 706. Now, I will try to update the stop losses in the future as and when I get some time, but I hope you all stick to the stop loss and not do a more than 5% allocation or maximum 10% allocation to Cipla from your capital. Okay, now the second pharma stock is Auropharma. Quickly go back to the charts. So again, Auropharma is again another 5-year breakout that we are seeing since 2015. Now, the similar kind of price action we have in all pharma companies, at least the major pharma companies, since 2010 to 2009-10. There was not much movement. Then we had this first movement over here out of this range, and then this movement failed. So this is called a breakout failure. Then we came down again, and then we had this nice good move from 100 odd levels to 900 odd levels. Now, since then, we have gone into a consolidation mode or a correction mode, I would say. And now, since 2015, again, I'm seeing a similar kind of setup, similar to Cipla that we discussed. Now, this is a 5-year breakout. So, since 2015 to 2020, this is the first time we've got the highest weekly close. So, which means the price has closed at the highest levels in many weeks since 2015, right? So, this is the first highest close. And I see momentum is picking up, and we should have some good movements here in Auropharma as well. And even the volumes, if you see, we had some nice green volumes here, big green volumes. And just after the COVID crash, we had some nice buying also seen. Right, so this is the second stock that I am looking at this week. Quickly jumping to the fundamentals. Again, it's a pretty safe company, which is trading at 909 rupees with a market cap similar to Cipla, around 53,000 crores. This is a little cheap compared to Cipla. Cipla is trading around 32 PE, but whereas this is around 17 PE. And even the ROC is much better than Cipla, around 18%, right? And the book value is 313. It is trading at 3 times the book value currently. So again, this is cheaper compared to Cipla, but I'm not sure why it's trading cheaper. But I expect some movements over here, and PE would probably catch up in the next few months or few years. It also has a very good coverage in terms of debt equity. It's pretty low, and also the interest coverage is pretty high, right? And the promoters hold much more here. In Cipla, we saw around a 30% promoter holding, but here we are seeing around a 52% promoter holding, right? So which is means the promoters do have some significant stake in the company. Um, Jumping to the profit and loss statement, again the same story of Cipla here as well, but here if you see the increase in sales is much higher compared to Cipla. Cipla had the CAGR sales growth digits in one digit, but here we are seeing a 16% growth in the last 3 years and a 14% growth in the last 5 years, right? So that's something which is interesting. So if I have to take a call between Cipla and Auropharma, I would probably go with Auropharma because of the cheap valuations it's trading at, and also given that they have a pretty a strong growth in their sales, and even in their profits, they have pretty strong growth in their profits. The margins have come down a bit by 2% operating profit margins, but I don't see that as a major concern. I think we should do well in this front. But even in the interest, it went up in the last 2 years and has again dropped significantly from 300 crores to 100 crores. So again, in terms of interest, also Auropharma has less interest compared to Cipla, right? And the profits have been pretty decent. Talked about these numbers over here. So the P&L looks really strong. I don't have any concerns with the P&L except for the dip in the margins, but I don't see that as a major concern. Jumping to the balance sheet, so I'm sorry, this is not highlighted correctly, but this highlight was for the borrowings. So the borrowings have went up from 3,000 crores to 6,000 crores, almost 7,000 crores, and it has come down again to 5,000 crores, right? But whereas we see the fixed assets have grown from 4,000 crores to 6,000 crores, and maybe that's why the borrowings went up, right? And now we see the borrowings, the assets have grown to almost 9,000 crores, whereas the borrowings are coming down. So maybe the company has done some of its investments to increase its sales, and I think which is the reason why the borrowings have come down now and the assets have gone up, right? So this is to do with Auropharma. So strong company, strong fundamentals, pharma space, and there's no concerns as such. So we can buy at current market price with a stop at 738. The next company is a company from the mid-cap space, which is Firstsource Solutions. Again, a company in the pharma sector, but they don't sell medicines or they don't sell generic products for the pharma space. Rather, they are into the customer management service. They are into more of transaction processing and debt collection and all that. So it's in the same space. So if this pharma space tends to, you know, increase their sales and numbers, then probably this company is going to benefit. So let's take a quick look at the charts, right? So this is a nice chart, almost 12 years. So if you see, we are crossing the 2007 levels after 12 years this year. That when we had this nice big rounding base. Now rounding base is a very significant reversal pattern, and a breakout from this zone would mean that the price is going to head much higher. No one knows how far, but all we can do is we keep our risk controlled at around, we keep a stop around 66 here around the last week low, and then we buy the stock. Now also if you see here, the volumes have been picking up since the COVID crash. In the downtrend here, the volumes were pretty low, but here the volume started picking up. And I think this is also another reason why I see a lot of big buying happening in FSL. And this week we had a strong move, around 15% move on Friday. So you see that 15% over here. And that's, I think, if we have follow through next week, then I think we're going to have nice moves from here onwards. Now, the reason why I recommend all these stocks are because they are breaking out from multi-year resistance zones or multi-year supply zones. And usually a breakout from multi-year supply zones are powerful. And these would probably give you a 50%, 100% returns, depending on the moves and what happens in the market, right? So quickly, let's jump into the fundamentals. Again, this is trading at around 90 rupees right now. It has, a market cap of 6,000 crores. That's around $1 billion. It's in the mid cap space, and it has a low PE of around 17. But the company is doing pretty well in terms of the return on investments, return on capital, which is deployed on 13%, and even the ROE is at 12.2%, right? And the book value is around 41, which means it's trading at 2 times the book value. And in a good market, some companies even trade at 3, 4, 5 times the book value. But I think book value obviously bound to increase also as and when the sales increase. So that's something which we always rely on in the future. Debt equity is pretty low. The company has a pretty good, um, liquid assets to cover the debts, and also the interest coverage is pretty good. And the promoter holdings are around 55%. Quickly jumping into the profit and loss statements, the sales has been increasing almost, but it's on the single digits. So we have a compounded sales growth of 6% and 5% here, and a compounded profit growth of 8% and 7%, right? So yeah, so these are the numbers in the profit and loss. Just look at the interest here. It's kind of dropping. So from 83, it has come down to 56 crores this quarter. Okay, so one can buy Firstsource Solutions with stop loss of 66. I presume this is going to give some good returns in the future. But again, please maintain your risk, define your capital, and then invest your money into the markets because there is always a probability that the markets can fall and the stock can reverse, right? Also, if you see here, we have increasing operating profit margins. It has gone up from 13 to 16%. Right now, the next company is Paisalo Digital. This is an interesting company. It hasn't done much in the last many years. Um, Again, it's a multi-year breakout which I'm looking at. So from since 2014 till now, the stock has just been going within a range. All right. So this means there's hardly any interest in the markets in the stock. But right now, we are seeing interest in the stock starting this month. Now, if you see, there's some massive buying which has happened this week. So the news is that SBI Life has picked up a 9% stake in Paisalo Digital. But the reason is not that we're entering the stock. The reason is that because the price has moved above a 6.5 year range. Right, so that's the reason why we are entering the stock, purely based from a technical perspective, supported with fundamentals. Um, so yes, so that's the massive buying, and that's the breakout we are having this week and this month. So if we expect this momentum to continue, we would keep a stop around 365, this level, the lows, recent lows around here. Right now, quickly jumping into the fundamentals. So the price is right now 521 crores. The market cap is around 2,200 crores. That's why it's a small cap company. It doesn't have a big market cap. The PE is around 40. It's already pretty expensive, but I hope the earnings catch up and the PE falls from here. Right? The ROC is around 12%, ROE is 7.5%. It's not great, but I think they're pretty decent numbers for a financing company. Book value is around 191, so it's trading again expensive on the higher side. And then the debt equity ratio is 1.5. It is okayish. It's not great like we had in the pharma companies, but yeah, it's okay. It's not like 4 or 5, which would concern me a lot, but it's around 1.6. Interest coverage ratio is okay. They can manage their interest payments to the banks and the investors. Sorry, the lenders. So I think that's again okay. Not a great number, but all I'm presuming is that the company is bound to do well, and that's why the price is breaking out here. So I presume these numbers are going to improve in the future, and I sense that the market is sensing that already here. That's why the price is moving. So hope to see some action in this counter in the future. Now, what the company does, it's basically into a non-deposit taking, non-banking finance company, which provides loans to people like us. And there are some interesting developments in the company. I not get into that, but yeah, let's quickly check the fundamentals. So in terms of the fundamentals, yeah, I spoke about this. SBI Life picked up nearly 9% stake in Paisalo Digital for 186 crores. So that's the news which came up this week on December 24th. But looking at the sales and profits here, if you see, the sales has been kind of improving steadily, and even the profits have been improving steadily. But it's not that great, right? So if you see the profits, they are hardly growing at 1% or 5% in the last 5 years. But the sales has been increasing. So maybe they are giving up profits to get more sales. I'm not sure about the strategy, but that's just my guess, right? But the one thing you see that should probably raise a alert or caution on your minds is the interest costs. It has gone up significantly last 3 years, almost a 50% increase, right? And then it's there steadily for the last 2 years. So I hope it doesn't increase much. If this increases, then that's something which would really worry me, right? But I think that's okay for now. And then the profit is around 50 crores. So the major expense is the interest for this company, right? Sort of 356 crores, half of the money goes in interest, right? And the remaining is what the shareholders earn, which and the company reinvests in their businesses. So the profits are kind of stable. They haven't improved much, but I hope these numbers will continue to be stable at least in the future. If not, if I hope they don't decrease in the future. Yeah, so that's about Paisalo Digital. So I'd buy at current market price. The stop loss is 365. Again, I repeat, do define how much you're going to risk and do a decent portfolio allocation. Don't go overboard on any stock that I discuss. Okay, the next stock is a very interesting stock. I'm sure this would excite most of you. Uh, it's called Khaitan Chemical and Fertilizers. And this stock has some really good fundamental numbers, but the stock technically hasn't performed, right? So the stock has been within a range since 2010. So 10 years there has been no movements out of this range. So what I expect is this high if it is crossed, right? So if we cross this recent highs of 28, 29, so I see some massive buying happening and massive movements happening from then on. A lot of momentum investors would get into the stock, and we would see some good buying here. But otherwise, the main reason I'm selected the stock is again multi-year breakouts. That's what I'm expecting here. It's 10-year breakout, and we've seen some nice volumes, continuous good volumes. Now, if you see in this run over here, we did not have good volumes always, right? So yeah, we saw volumes here, but that was the highest point, and since then we've not seen such volumes in past, right? So that's the main reason why I think the stock could break out. But you need to buy above the recent highs. So above 28, 29 is what you have to buy, right? With a stop around 17. Or if you want to enter right now, you can enter, but ensure that you keep a stop around 17 because if it doesn't break out, it comes back, then you get out if it goes below 17. So that's the technical perspective. Now coming back to the fundamentals. So yeah, the price is around 24, 25. It is just a 240 crore company. It's a very small company, right? And looking at the fundamentals, when I go to the profit and loss and the balance sheet, you will see how good this company is doing, and I see that this company can really perform well. And it is just trading at a price earnings ratio of 9, which is very cheap compared to the numbers that it's posting, right? So if you see, even the ROC has increased from 8% in 2018 to 14% now, right? So that's almost 600 basis points improvement, and the ROE is at 10.4%, and the book value is 17, so it's not even trading twice the book value. It's around one and a half times the book value, and the debt equity is around zero point 0.6. It has a very good interest coverage ratio, around 4, right? So every 1 rupee interest they have, they can pay up to 4 times that interest, and the promoters do hold a very recent stake in the company. So they are basically a chemical company which is involved in a lot of chemicals and fertilizers. So they also have crude and oil, but I'm sure the majority of this sales comes from chemical manufacturing. Now, as I said, let's look at the profit and loss. Now, if you see the numbers here, they are very, very interesting. Now, since 2017, if you see the last 4 years, they were around 350 crores sales. And in fact, they reduced from 600 crores, but it's picking up again. So 350, 370, 437, 474. Right now, that's an increase of 6% in the last 5 years and 7% in the last 3 years. CAGR, which is what I'm talking about. And the operating profit has grown much, much stronger, right? So from 38, it has gone up all the way to 60. Now, the reason this is, how this can reflect in the stock prices is now this movement over here has not reflected in stock price yet. So the markets are still not have not taken this and it's not put in the stock price yet. So growth of almost 105% profit growth in the last 3 years. I think the stock has not done anything, and I think the stock needs to go up to catch up with the numbers that it's posted. Okay, so an interest if you see has come down from 30 crores to 15 crores, right? That's a 50% reduction in interest, and this is reflecting in the profit numbers. The net profit, if you see, has gone up from almost here, it was almost stable. They had a 31 crores profit when they have almost the highs. Now that numbers are coming back. Now, if you see here, they had a 644 crores sales and they had 24 crore profit, but here with just 447 crores, 474 crores, they are doing a 27 crore profit. Now that shows how the efficiency is increasing. So that's why the profit margin, the increase in profit margin, reduction in interest cost, all this is reflecting here in the profit numbers. And if you compare the peers, the PE ratio is really low, and they are one of the smallest company amongst the peers. So I see that the company can grow a lot from here. And looking at the balance sheet again, if you see, we talked about the reducing interest. The same thing here. The balance sheet also, the borrowings here have also reduced from 240 crores to 99 crores. So that's also reduction in debt, aggressive reduction in debts. So yeah, so we'd buy this at current market price or about 29, whatever price you buy, but keep a stop around 70. Now that's very important, stop loss, right? So that's all I had for this week. 5 stocks: Cipla, Auropharma, FSL, Paisalo, and Khaitan, right? So let's see how this goes, and I will try to update the stop losses going forward as and when the stock moves up for the stocks I have. If you have any queries or if you like this video, do share it with your friends. Do hit on the subscribe channel and subscribe to my YouTube. To follow me on Twitter, and I hope you have a good week ahead. Um, Thank you.